We believe that wealth is a journey, and that this is your jumpstart to trading success. Hi, everybody, and welcome back to the Traders Mindchat show. I'm Mike.
And I'm Melissa, and we just had pretty bad storm here in New York this past week. I know there's a lot of flooding in New York City.
Yeah, Hurricane Ida's if you've seen on TikTok or any of those, gushing water.
The subway systems in New York City, we haven't seen that historic flooding that we haven't seen in ever, basically.
Yeah, people's basements getting flooded. I just heard from one of our members too that they're dealing with that.
Oh wow, it's been so hard and so painful to hear about these stories. So wishing everybody who's going through this, like, we wish you much love and support through this, and we know that you will get to the other side of this. I know when we dealt with Hurricane Sandy not too long ago, it's tough. It's a tough situation. So that's one of the things we're going to be talking about today on our show is how do you deal with the unexpected when you're trading? So for this past week, Mike, so how did you handle that situation, or how have you handled situations like this in the past for when you're not expecting these type of natural disasters or things to impact your trading?
Well, one of the things that I always have, and I hear people saying about stop losses, right? Like I love having a stop loss in the market, which means that if a trade falls below X, then I'm just going to be taken out of the position, right? And that'll be sitting with the broker. And I've heard a lot of people that are against stop losses saying that, oh, well, yeah, the market makers are going to see that and take you out. Like, I think that's nonsense, and you kind of just being afraid of the boogeyman almost, right? Like, if you know how to set stops appropriately, then you should only be taken out of a trade if something is happening, right? Like, if your trade is reversing and if your thesis is no longer true.
Okay, so in this case, how would you analyze this thesis, or how would you even come up with this thesis, and how would you even know if it's true or not?
All right, so there's a few different things. First, similar to the topic that we spoke about in the last video, right? About probabilities. So understanding that the market, there is no one right or wrong. We're all dealing in probabilities. Sometimes a stock you sell and it will rally in your face like that. That's just a fact. But if it's happening all the time, then there's likely something wrong with how you're setting your stop loss. Right? When I'm looking to set a stop loss, for example, and there's lots of ways to do this, I like to think of it as a floor, right? So where is the floor? And how sturdy is this floor? Am I going to be able to walk on it? Am I going to be able to drive a bus over it? Or is it made out of paper, and if I, put a coin on it, it's just going to fall through? Right? Like, how sturdy is this floor? And so there's a lot of different ways that I'll go about looking for that. But that's how a stop loss should be set. It should be set at a spot that if it breaks, then that means that something is very wrong and you don't want to be in this trade anymore anyway.
All right, I'm going to take a step back. So you had the stop loss in place already. So it's not like, oh, we just got the weather forecast, or I have to get rushed to the hospital because of an illness or anything, or Lily got Lego stuck in her nose.
Oh my God, yeah.
Crazy things that have happened. And and so in this case, the stop loss is set. So you've already set this previously. Or is this happening right as that emergency is happening?
You're not getting the alert on your phone and it's blaring at 3 a.m. and it's just oh, let me go set my stop loss. No, you're planning ahead. Preparation is everything.
Okay, so you're planning ahead for this. So you don't know if there is going to be emergency, but you are just taking that precaution, almost like putting insurance for your money, right?
That's a great way to think of it. Yeah, you want to have an insurance for your trade, and that insurance is your stop loss.
Okay. So you've set this stop loss, and how have you determined the stop loss? Because you don't want to set it too high. or too low. So how do you find that great spot? I don't know. I don't know what it's called. Perfect spot.
All right, so the first thing that I'm looking for, like I'm looking for stocks that are setting up in patterns that I like. I like, so let's say that I find one. Then I'm figuring out where I'm going to enter, where is my stop loss going to be. So when I'm looking at the entry point and the stop loss, typically I like it to be in the neighborhood of about 5% or less. If it's 5.5, if it's 6, like it's like getting to like the outer rim, like anything more than 6, and it's like I tend to pass on it immediately. So it's looking for that threshold. Now, how did I come up with that threshold? It's from looking at the trades that I tend to take and how much does a trade typically fall back, right? Like, well, where am I typically getting stopped out, or
When it hits that
what's
point, does it sell right away?
the way that I do it, yeah. So let's say like I'm entering a trade at 100, my stop loss is at 95. The moment that it gets price falls to 95, a market order is generated, right? So meaning that my broker will take that and then just sell it at whatever price it could get.
So if you didn't have that stop loss, let's say now we're at the urgent care with Lily, you don't have reception, you can't get on your phone, and the stock keeps going down, 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 down. You have no way of stopping that.
Right. If you didn't set a stop loss, then like you just come back and it's just like, oh, I got in at 100 and now it's trading at 50.
So if you have that stop loss at that, you said like that 5% thresholds, at least you have that insurance that it's not going to go below that. So if you were gone for a long period of time and you come back,
it could go below that. Like, so like let's say price, sometimes there's a thing called like a gap down, right? Like so you might have bought at 100 and then tomorrow, let's say price opens at 90. Right? Your stop loss was at 95. So that order would trigger and take you out at 90.
Okay.
But the idea then is that you're already wrong, right? Like the trade, or like your thesis was disproved the moment that price fell below where you set your stop. So you want out. Like you don't want to sit there and wait like, oh, well, maybe it comes back. And maybe it does. That will happen sometimes. But what if it doesn't? Right? Like you're already wrong. Like cut your loss while you can.
But what if you sell and then you're like, damn it, I didn't want to sell all those shares. Can you still get back into that trade?
Yeah, you could. No, there's no rule that says that once you sell, like you can't. Like you could get back in like a minute later if you want.
Okay. So even if it did trigger, you sold all your shares, you broke even, or you had a slight loss, it could have been a lot more of a loss. So that's why you said it. But then you could always get back in. So but when you bought at a certain point, I guess that's for me too. Like if you bought at a certain point and now you're gonna buy higher, is that something that deters people? Like now I have to buy this stock at a higher price than what I have. Like, oh, I shouldn't have sold it at that stop loss.
That's a common fear, right? Like, oh, like I'm gonna sell, and then price is going to move higher, and then I'm gonna have to buy this thing back at a higher price, and now I feel like even more of a fool, right? Like, oh, why didn't I just hold? The thing about trading is that every single trade, even if it's in the same name, is a separate event. Right? Like the market doesn't know who you are or what you're doing. Like price is just moving around, right? So if you buy stock whatever at 100, you sell it, and then now it's at like 105. Like that's a separate event, right? With your same kind of probability, like whatever your odds are, like if you're batting 50-50, if you're winning like maybe 80% of the time, if you're winning 40% of the time, it's just like another event. It's just like, well, when you go to the craps table, right? Like remember that when we went to Vegas and like, you nearly killed a dealer?
Don't remind me, yes.
Yeah, so
we had a couple of drinks in us at that point, but cut me some slack.
So every time you throw the dice, it's a separate event. right? Like even if you roll the 7 and you got a 7 like a bunch of times in a row, every throw is a separate event.
Okay.
Same thing with a trade, right? Like you buy a trade, like you get in today, and let's say you sell and it's a loss. You look at the same company tomorrow or next week. It's a new trade. So part of what I do to help me think about this as a new trade, like I'll clean my chart. Right? Like so, one of the things that I do is like I'll mark up charts when I'm interested in a stock. Like I'll start annotating, marking them up, putting notes on them, and I'll keep those notes on while the trade is in play. Then once the trade is done, I'll save that chart, but then I'll clean the whole thing so that way when I go and look at it again, I'm looking at it with a fresh set of eyes, and I'm looking at it not from a biased point of view. Like, oh, that trade was a loser. I'm never going to touch this thing again. I'm looking at it with a fresh set of eyes, and then that allows me to be a bit
More
more
objective.
objective. Yeah.
Yeah. It reminds me for my writing too is that, yeah, sometimes, yeah, I'll do a save as, especially if I get stuck and I don't know where to go with my story. I'll do a save as, and then so I always still have that version. Then you can completely go off in a completely new direction or just follow your instincts and take it to a new, it's like, almost like a grit. It's a fresh perspective, it's a fresh way of looking at the story, and it may lead you a place that you never realized before if you stayed with that original draft. So that's
Right.
an interesting way to do it with the charts.
Yeah, and and you're not deleting it completely too. Like you could still like revisit like what happened before.
Yeah, if I'm not happy with this
Yeah.
version, I can still go back and do the same thing all over again. Yeah, or if I say I like that version better.
Yeah. So for catastrophes, major unexpected events, the first thing is to have like a stop loss in like that. That's going to save your butt. The next thing that I would do too, like if it is something like that, like I wouldn't be looking to get active in the market again until the event is passed and I'm back in a positive state.
That's a great advice because you're just not in the right mindset to be trading when you're dealing with whatever type of disaster or catastrophe that you're dealing with at that point.
Yeah, and I think that especially if trading is your primary source of income, that you might feel in a rush to get back and like start making money quickly. Like, oh my God, I've got to like pay for all this damage. I've got to pay for funeral costs
Medical
or
bills, yeah, yeah.
right. But are you going to be in a proper frame of mind to execute at the level that you were with all the stuff going on? Maybe you are, right? But you need to have that level of awareness for yourself, like to be able to go in and execute.
Do some of these people who are doing it full time, is that why they automate? So in these type of events, if they have an automation in place, like it'll still continue trading for them while they can't be present.
That's part of it. Part of it for many is um, the gut feel part of it that I often talk about, and like instinctual, right? Like where trading is almost second nature. Like you just see something and it's just like okay, like well when X happens, like okay, I'm clicking this button and I'm executing, and you're in a flow state. Very similar to how like you ever get into a car and drive somewhere and you get to your destination and you don't really remember how you got there,
Mm-hmm.
right? Like it's
A
kind
little
of like that.
scary, yeah, but yeah.
But like people, that happens to people all the time. For traders that are doing this full time, that it's their primary source of income, like that's a frequent place that they visit, right? Like that kind of mental state where you're just kind of doing your thing and you're not thinking or analyzing too much like in the moment. You're like
You're just in that flow state.
yes. um you also need to have an awareness of when you're knocked out of a flow state. If like if that's you, that's where mindset, journaling, awareness of thoughts and beliefs and all that kind of stuff, that's where that really comes in. That's where mental preparation comes in the trading as well. So you could put yourself into any particular state that you want, like that. And there's ways to do it. Part of trading too is having an awareness of the state that you're in. And if you're not in that flow state, either get into it or back off.
What's a great way to test yourself if you're ready? And let's say
What do
we
you
know
mean?
the hurricane and Ida just happened, the flooding, so people are still dealing with the aftermath of that. How can they test or check with themselves if they are now ready to get back into trading? Like what's
Toe in the water, right? Like just like going to the pool, right? Like be that person that like, oh, I'm not just gonna jump right in. I'm gonna like put the toe into the water and test it. So how do you do that in trading? Smaller position size, right? Like so you're just getting back in. Trade small, right? Like take a little test position here and there, see how it does, see how you feel, and if that's working and you feel good, then okay, like maybe you trade the next trade at the same size, or if not, maybe just a little bit bigger, right? And then as you gradually getting back in, then you'll know.
I think that's great advice. I really do, because it's not like doing the full cannonball and like
Yeah,
going
no,
all in. Like I got to make up for lost time or for the lost money that I just had because I wasn't able to trade.
no, the market is an infinite stream of opportunity, and not only that, trading is such where it's not really going to be a like a steady income, at least for most of the traders that I know. Like it's not okay, I'm gonna get $500 like every single day or every single week, or like 10 grand a week. Like you have spurts, and then it'll level off. You'll have a little bit of a drawdown, and then there's another spurt, right? Like so with that, yeah, like your big wins can be just around the corner. Uh, a lot of it is going to be dependent upon the individual uh, trader and the mindset and state that they're in.
All really great advice. Anything else that you'd recommend for anybody who is dealing with something that's unexpected? So we have the first thing, which is to
The stop
the
loss,
stop loss, and then we have
like gradually getting back into trading, and um,
anything else that you could think of? Are those like the main things?
I think that those are the main things. Yeah, it's not overly complex. It's having like if it's a car, like having brakes on the
Mm-hmm.
car is important, and then having a way to slowly get back in and start to reacclimate.
Okay, this is great. So if you are going through a tough time right now, we send you our love and support, and hopefully this show has been helpful to you as you are starting to get back into trading. And if you have any questions, always feel free to reach out to us at marawealth.com. And we look forward to seeing you next time.
Yeah, and if you're watching this on YouTube, you could drop comments down below. I read all of them.
See you soon. Thanks,
All right.
everyone.
Take care, everybody.